You know, as we are wrapping up 2025, the market is throwing an absolute party. It's December 22nd, champagne corks are basically popping on Wall Street, and the mood is just electric. But you know the thing about parties? Sometimes they end really, really badly.
Okay, so let's get right into it. The S&P 500, the Nasdaq, the Dow, everything's climbing to record highs. I mean, on the surface, it looks amazing. So why are we even asking this question? What's the catch here?
Well, here's why. Because bubbling just beneath the surface, there are 4 huge red flags waving. These are the risks that aren't really making the headlines, but they have the potential to completely turn this party upside down and cause some serious pain in the new year. And that's what we're going to do, break down every single one for you.
But first, let's be fair. We have to acknowledge why things feel so good in the first place. You can't just ignore the positive signs. And right now, the numbers, they are telling a very, very optimistic story.
And what's so interesting is how all this data works together. You can see the major indexes are all up, right? But look over at the VIX index. That's Wall Street's so-called fear gauge. It's down over 5%, sitting at a super calm 14.06. That signals pretty much zero fear among investors. It is the classic risk-on environment. So here's the thing you gotta understand. This isn't just some random rally across the board. It's being powered by one specific engine, the financial sector. I mean, you've got companies like Citigroup that are just absolutely soaring, hitting brand new 52-week highs. This kind of concentrated strength is what's lifting the whole market up.
But, you know, whenever you have one sector doing all the heavy lifting, you got to ask yourself, who's getting left behind? Because when you peel back just one layer, a very, very different picture starts to emerge.
And wow, this chart just lays it all out, doesn't it? On the left, you've got the financial sector, just booming. In the middle, you have a specific winner, Walmart, holding its own. But then, look to the right. The broader retail sector, it's actually in the negative. This tells you not everyone is getting an invitation to this year-end party. And hey, you don't just have to take my word for it. The market commentator Jim Cramer put it about as bluntly as you can. Retail outside of Walmart is disastrous. That's a really powerful statement that tells you the supposed economic strength, it's not being felt everywhere, not by a long shot. Okay, so this brings us to the most important part of our whole discussion, the 4 red flags that you need to be watching like a hawk as we head into 2026. These are the hidden dangers that could be lurking in your portfolio right now.
First up, and this one is a real heavyweight, the valuation bubble.
To put it simply, things are getting really, really expensive. The price-to-earnings ratio of the S&P 500 is hovering near historic highs. That means investors are paying a huge premium for future earnings that might not even materialize. You've got analysts who are already starting to flag major stocks, like the tech giant Broadcom, as being overvalued. And when valuations get this stretched, well, the risk of a sudden, sharp drop grows every single day.
The second red flag is something the market hates more than almost anything else, and that is uncertainty.
We're talking specifically about policy uncertainty. Think about it. Federal Reserve Chairman Jerome Powell's term is up in May. Who's going to replace him? What if their strategy for interest rates is completely different? That creates a huge cloud of unpredictability. And at the same time, the bond market is flashing its own warning signs. The yield curve, that's the difference between short-term and long-term rates, it's signaling some real caution ahead for the economy.
Okay, red flag number 3. This brings us right back to that retail chart we saw a minute ago. It's all about the weakening health of the average consumer.
We already saw that if you take out the bargain hunting at places like Walmart, the retail sector is in deep trouble. What does that tell us? It tells us that consumers are incredibly sensitive to price right now. They're not out there spending freely, they're hunting for deals. And worse, a lot of the spending that is happening, it's being fueled by a growing mountain of credit card debt. That is just not a sustainable path.
And finally, our fourth risk. This is the most immediate one, affecting the market as we speak. Holiday liquidity risk.
So, as we get into this holiday week, trading volume just dries up. Why? Because all the big institutional traders are on vacation. Now, think of it like a river. In a deep river with tons of water, high volume, a big boat barely makes a ripple. But in a shallow river, low volume, that same boat can cause a massive, chaotic wave. That's exactly why low liquidity is so dangerous. Even one single large buy or sell order can cause these wild, amplified price swings that make the whole market much, much more fragile.
So, with these 4 major risks staring us in the face, the big question is, what are you supposed to do about it? Let's pivot from the problems to the solutions. Here's an action plan you can use this very week to get your portfolio ready.
Based on all the analysis, there are pretty much two clear paths forward, and it all depends on your personal risk tolerance. If you're a risk taker, you might try to ride that momentum in the financial sector a little longer. But, and this is a big but, you've got to have tight stop losses in place to protect yourself. Now, if you're more on the conservative side, the advice is really simple. Just stay on the sidelines, hold what you have, and wait until January to make any new buys.
But look, no matter what kind of investor you are, here are 4 steps that every single one of us should be taking this week. Number 1, review your 2025 performance. You need to know exactly where you stand. 2, rebalance your portfolio. Make sure you're not way too exposed to any one area. 3, fortify your defenses. Review your risk rules, tighten them up. And finally, number 4, strategize. Draft a clear, written plan for what you want to achieve in 2026.
Look, just getting through 2025 has been a journey, no doubt about it. But as this rally continues on some seriously thin ice, the real test is just around the corner. So the question isn't whether you enjoyed the party, it's whether you're truly prepared for what comes next.